What would you say is currently driving crypto prices? We've seen several headlines recently, including PayPal's news that it launched a dollar-backed stablecoin. We also saw some regulatory advancements here in the US, all while the Fed raised rates to a 22-year high. Given all of that, what would you say is the main driver of crypto prices right now?
The main driver right now is summer. It's slow. There hasn't been a lot of drivers of price. You mentioned regulatory, legal. I mean, that's really been the story for the most part of the entire year, and including right now. The market is generally just trading on headlines coming out of Washington or regulatory bottles or regulatory agencies or out of Congress itself and some of the bills that are being passed. There haven't been as many crypto specific or sector specific or even asset specific stories recently that the market has really dug into. And of course, it is August. It's not a high volume period of time in general in markets, and that's starting to seep its way into digital assets as well. The volatility really low. I think we're at a 4-year low for both Bitcoin and ETH volatility, similar to what we're seeing in the S&P. I mean, there wasn't a single day in July, for example, that the S&P moved more than 1%. So, we're definitely feeling a little bit of those summer doldrums right now.
We recently learned that the Fed is stepping up its oversight of banks involved in crypto through a new program. The Fed also laid out more rules on banks looking to use stablecoins. How do you think this will impact the crypto industry and prices?
Yeah, and this is going to be sort of a boring answer, but I don't think it does right now. I mean, there is so much happening right now in Washington. And, there are certain research firms that dedicate themselves to Washington policy. Again, not crypto specific. You see this in the equity and the debt world as well. Firms that dedicate themselves to having an inside track on everything from telecom legislation to financial regulation and legislation. It's very hard to invest based on a view on regulatory clarity, especially in a market like crypto, where you're really looking at changes, day over day, week over week, month over month, a lot of more short-term trading. And it's very hard to invest that way when you're talking about congressional action that can take 2 to 5 years. So each headline, may drive algorithms, which drive prices on a short-term basis. But it's very hard to have like a real investment thesis around, I believe this bill will be passed, or I believe this bill will be changed in this fashion. And shout out to a lot of the lobbying groups in the digital asset industry specifically, who are dedicating their businesses and lives to uncovering some of this information. But it's really not having a huge impact. It will be a huge impact once it becomes law or once there is real clarity. But the discussion period, the bills, the drafts, all the changes, it's really just not having a huge impact, with the exception of the ETFs. I think the ETFs are a little easier to play from an investment standpoint. One, because there's specific dates. You look at each of the applications from, BlackRock to Arc to, the 10 or 12 others that are out there. They have specific dates that we know there's going to be some sort of action, either a delay or an approval or a denial. And also, there's more direct ways to invest in that. One of them being, investing in the Grayscale Trust, the Bitcoin GBTC Trust, the Ethereum ETHE Trust, the playing that collapse in the discount based on when an ETF would be approved. That one is having much more direct impact, whereas stablecoin bills and everything else that's coming, it's just harder to have a real investment thesis.
We also recently learned that crypto exchange Bitstamp is winding down some altcoin trading for users in the US. That move follows Robinhood delisting some altcoins mentioned in the SEC lawsuits against Coinbase and Binance, including Solana's Sol token and Polygon's Matic token. Now, that happened in June, and in that quarter, Robinhood's crypto revenue dropped 18%, according to its latest earnings report. So what do you think the delisting of some tokens means for crypto prices?
Yeah, well, there's a couple things, right? So first of all, this is a industry that has perfect substitutes, right? It's very rare that the delisting at one exchange is really going to have that big of an influence on whether or not investors have access to that, because there are so many other exchanges, both decentralized as well as centralized, where you can access investing or trading of specific tokens. So it doesn't have a huge impact. Where it does have impact is obviously on liquidity and volumes. Take XRP, for example. When XRP first was delisted from Coinbase a few years ago, when the SEC first deemed that XRP was a security. And of course, now just recently, that court ruling came about from the Southern District of New York saying that it in fact is not a security. It's only the offering of it that would be. And then of course, Coinbase relisted it. So you can see in certain cases like that, right? XRP is a top 5 token in terms of volume, in terms of market cap. So when you have one of the bigger players list or delist, you can see a much bigger impact on liquidity and volumes, which therefore might give investors and traders more confidence to trade it. So you can see some price moves there. In general, though, it's just not that big of a deal when you're talking about broad listings and delistings. What I do think is interesting is, CoinGecko, Masari, some of the pricing services, they were very quick to put up a screener for regulatory action tokens. I think the CoinGecko sectors and watch list is actually a really interesting one to follow because it shows you what's hot and what's top of mind for investors and traders. When they pop up an AI sector or they pop up a gaming or, in this case, regulatory action, it shows you that market participants are focused on this. Like they do want to see how are these subset of tokens reacting to this information. But like I said, there's just not that many places outside of Binance where it has so much of the volume that if you lose that access or that volume, it's going to have that big of a direct impact on price.
You mentioned XRP, so expanding on that, last month, a judge ruled that Ripple did not violate federal securities law by selling its native token XRP on public exchanges. And then a couple of weeks later, a federal judge in New York split with that judge, allowing the SEC to proceed with its case against Terraform Labs and its founder, Do Kwon. What do you think about those decisions, and what do you think are the implications for the industry?
Sure. I mean, true to form in crypto, if you're looking for regulatory clarity, you can't have less regulatory clarity than having two courts within a few weeks of each other come out with completely opposing opinions, right? This has been the problem, in terms of this overhang that this industry has had over its head for really most of the last 2 years. You're just not getting anywhere with regard to that clarity. Now, I'll caveat that by saying there's only a few people who care if something is deemed a security or not. Like I run an asset management firm. We invest across multiple different fund strategies and products. We invest in things that are not securities. We invest in assets that are securities. We don't care, right? There's no rule from an asset management or an individual standpoint of whether or not you can own or trade or invest in something that is or is not a security. The people who do care are the token issuers, because if you are going to issue something that is deemed a security, then there is a lot more rules and money and paperwork that goes into being able to issue said security versus something that is not a security. And same with the exchanges. If you are going to list something for trading, then there's a lot more paperwork and filings that you have to go through and money that you have to pay in order to have the licenses to be able to trade these things. So it's a big deal for the Coinbases, the Binances, the Krakens of the world. It's a big deal for future token issuers. It really doesn't mean anything for existing tokens that are already out there. It means nothing for the investors who buy and sell this stuff. So it creates a lot of headlines. It certainly is confusing. For instance, let's say that I'm a company that's thinking about issuing a token. Well, I would love to know ahead of time if my token that I'm going to be issuing is going to be deemed a security or not, because it changes the way that I issue that token. But it doesn't do a lot for existing tokens and existing investors and traders. It just creates this stalemate where we just haven't seen a lot of new issuance in the last 2 years.